So I do believe that if you are a founder and you are trying to build a business that is really going to go somewhere, I do think you need some type of presence in an online world.
This episode is presented by our friends at Front Finance. Hello, everyone. Welcome. I am here with Claire Diaz-Ortiz. She is an author, a speaker, an angel investor, and partner at Magma Partners, a venture capital fund focused on investing in the best entrepreneurs in Latin America to launch and scale in the United States. Only 8% of venture capital investing partners are women in Latin America versus 13% in the US. And as a partner, Claire is heading up a new firm-wide initiative to invest in at least 20 female-founded Latin American companies over the next 3 years. Prior to her investing work, Claire was an early employee at Twitter. Notably, she was called the woman who got the Pope on Twitter. And she's also been named one of the most generous people in social media and one of the 100 most creative people in business by Fast Company. What's more, she is an award-winning author of 8 books that have been published in more than a dozen countries. I'm so excited to speak with Claire. This discussion will be chock full of valuable information about investing, the future of digital branding, international startup expansion, so make sure to take good notes. Claire, welcome to The Confident Investor.
Thank you so much for having me. It's so good to be here and to see you up there in winter.
Well, you are an expert in a number of areas. You've had a very storied career, and particularly with investing in startups and helping brands navigate the digital landscape. I'd like to just start by asking you to give us a bit of background on your early career and how you got started in investing.
Sure. So, I think like many venture investors, the path was definitely not straight for me. I went to college and studied history, fem studies, and then did a graduate degree in anthropology. And after that, I got a really crappy but amazing job as an online editor that basically allowed me to kind of bum around the world for 5 years in different places. And it was amazing. But in the middle of that journey, I ended up at an orphanage in Kenya and ended up starting a small nonprofit based out of that orphanage. And the reason that that nonprofit was able to get off the ground, this was the mid 2000s, was because I had started a blog, and the blog had shockingly become popular. And, if you were blogging back in 2006, you're probably using blogger.com, which I was. I had one of those addresses, .blogspot.com. And so I had this blog, the Blogger folks found it, they kind of promoted it, made it even more popular. And then when it came time for them to do their famed 2-week experiment to end up building what ended up being Twitter, they suggested I get on board Twitter and try using that. So I essentially, while living in this orphanage in Kenya, running this small nonprofit, became a user of the platform, a kind of an influencer, simply because no one else was tweeting at the time, and certainly no one else out in Kenya. So that led me to business school. I went to business school at Oxford. Jeff Skoll from eBay, who started the Skoll Foundation, has a program at Oxford for social entrepreneurs. And that's what I was at the time. I completely identified as that. And I went with the goal of growing my nonprofit. And while I was there, Twitter kind of fell into my lap. I began an internship with them and then ended up sort of staying for almost 6 years. I left Twitter some years ago. One of the big reasons was to be able to move full time to Latin America, where my husband is from, and we had met here some years before, and we were doing a lot of back and forth. So I kind of had kids, was hanging out here in Argentina, was writing some more books because I had started writing books at that point, and then I really got kind of this bug to try angel investing, and so I found this course for female funders and took it, and then wrote my first check. And this was in 2016. And that was kind of the thing that sparked it all. About a year ago, almost a year ago, I became a VC in LATAM, and yeah, I've been investing for a few years now, and I'm loving it. My whole passion, I should say, is really to invest in female founders and underestimated founders, though. So for me, making sure I chose a firm and ended up at a firm like Magma, that was kind of the guiding principle, I would say.
This episode is presented by our friends at Front Finance. Are you looking for ways to boost your investing strategy? Check out Front. It's a free app that helps you make better investment decisions with their proprietary Fisco technology. It analyzes companies and stock data 24/7 and rates stocks with a single score, like a credit score for stocks. Connect your existing broker to get a complete portfolio analysis and daily personalized stock picks based on your preferences and existing investments. It's time to start investing with data, not your gut. Download Front for free at refer.front.org/Lisa. What was that very first angel investment that you made, and why did you make it?
It was through a syndicate that was created after I did this course. So I think I made it because I really respected the person who had taught me how to angel invest in this course. And when she said, "Are you ready to do your first investment?" I said, yes. And I think looking back, that is a wonderful way to do it. There are some really great hybrid models of kind of syndicate slash LP slash learning community type angel groups out there, which I think are really, really solid ways to start getting us started, especially with small checks, especially with small checks.
So what is it that you look for now? I mean, first and foremost, you shared with us this experience around getting in early on the digital branding side, how key it is to create a message that really catches on. What is it that you're looking for now when it comes to founders and early stage companies?
Yeah, so I mean, I really love the pre-seed stage. I seed invest as well, but for me, the most fun I can have is when I'm the first check-in or almost the first check-in to what I see as a very gritty, very impressive, very driven founder who maybe the world hasn't yet quite started to believe in yet. So that is what I look for, is a founder with a real mission, a founder with a real purpose, a founder who is doing something that is based off of something that happened in his or her life, or some solution to some problem that he or she thinks that he or she finally has. I'm not the person to pitch if you did a case study project at Wharton and looked at what market was the best market to create a startup in right now. That's just not really my thing. My thing is all about sort of finding those resilient, underestimated founders who have an idea that is really solving something that is personal for them in some way.
Awesome. And when it comes to branding, it's never been easier to spread information, and there's so much information out there, and it's so much on social media that it's really hard to stand out. What would you say is key for brands to create a message that catches on and sticks with the audience that they're trying to reach? What do you look for as an investor?
Yeah, so I think I'll tell you the story about one of my investments right now that I really love. It's a founder I'm super bullish about. Um, Her name is Emma Sanchez Andrade Smith. And I knew of Emma because some time ago she had a prior fintech out in Africa, and I saw her win at a competition called Slush in Finland, which is this huge startup competition every year. And so when she left that company and started something else and reached out to my partner cold with what I thought was a really well done pitch, but for something that I wasn't really sure she was totally bought into, it it sparked my interest. And that's when we began to talk. And I think that one of the things that most impressed me about Emma early on, which is something I truly look for in founders, is I want them to be able to sell me on the idea and on them as a founder. And that doesn't mean that they need to inflate things or exaggerate things, or certainly not hide things or say things, as they aren't. But I do think it's really important, especially with solo founders, that you kind of see that dynamism and you buy into that person. And I say this because I think this relates to branding, because we live in such an online world where so much of our lives are lived online. And so I do believe that if you are a founder and you are trying to build a business that is really going to go somewhere, I do think you need some type of presence in an online world. And so, when I talk about about Emma, this was one of the things she did have. And it wasn't, some 400,000 followers on Instagram by any means, but it just meant that she had portrayed herself in a certain way on the internet that made me even more excited to invest when, she started to tell me sort of her vision. So I think it's important to remember that, you are selling yourself when you are a founder. You are not just selling the idea for your company because, in the case of Emma, the original thing she pitched was not actually the company I ended up investing in a couple months later, right? That idea changed, but the Emma she was selling stayed the same.
Love that. And also, I think to the point of branding yourself, one thing that we don't really talk about as investors is the importance of the investor branding him or herself, especially to get access to high quality founders and deals. So, you're someone with a significant online presence. Talk to me about what it's like and what you should be thinking about in terms of branding as an investor.
Yeah, I mean, so I think someone who does this really well is a friend who's in my angel group, Lolita Taub. She's a GP at the Community Fund, and she's a very, very active user of Twitter and just a provider of all the information, of all the helpful things. Lolita is here to help. People have made jokes like Lolita should really be Lolita as a service, right? Because she provides so much kind of valuable content to startup founders and to other investors. And so I think she's a perfect example of someone doing branding super well, branding for herself as an investor and for herself as a founder friendly investor. So I think she is a great example. I would say the other thing that I really like that an investor does when we think about sort of a little bit of their online presence or the way they brand themselves is I think it's really important to be able to see a little bit of that investor's real personality and real interests. And one of the reasons I say this is that, I love it when an entrepreneur has done enough research on me to know something interesting about me that we can connect over in a pitch conversation. And I'm not expecting every founder has to do that. Founders have to pitch hundreds and hundreds of VCs sometimes. But if you've got a top, you know, list of top 10 investors you really want in your company, I think it's good to know some things about them and to know some things about not just how they invest, but maybe, what they like online, what kind of shows they watch, if they're complaining about The Bachelor, if they're taking the dog out to walk, that kind of stuff. Because I think it also makes you as a founder start to see, hey, this is what our, founder investor relationship would maybe be about going forward.
And in terms of the actual platform themselves, what do you think is the most important digital platform now for brands who are growing in the digital age? And if you had to pick just one, which one would you recommend?
Okay, so I've written a number of books. My latest book is called Social Media Success for Every Brand, and the key thing that that book tells you is you take a quiz to find out which is the best social media platform for you and your brand. So I cannot pick one platform for everyone. They are very, very different. And let me just give you kind of a few examples. If you are running a D2C consumer company, you are going to probably have way more success on Instagram than you would ever see on something like LinkedIn. If you are obviously some type of HR recruiting SaaS tool, LinkedIn is the place for you. If you are an investor or a founder, start as Twitter, the place where you basically network all day and all night, is the place for you. So these are kind of the things where you start looking at how different platforms can offer different things for you. And I think what's really important when you think about social media platforms, particularly in terms of growing a brand presence, is that most brands do not, at least in the earlier days, have enough bandwidth to do many social media platforms well. So what I always say is focus on one, maybe two, and then on the others, simply put up a profile, maybe have one of those auto post widgets that post something every month or so on there, but basically don't touch them and just focus on the one or two that are really, really important for the audience you are trying to reach. So for me right now, I focus on Instagram. Excuse me, eject that. For me right now, I focused on Twitter for all my career stuff. And then on Instagram, I post kind of funny fun stuff from my family. I do not anticipate ever meeting someone in any kind of networking capacity via my absurd Instagram posts. But with Twitter, I'm doing a mix. I might do some personal things, but a lot of what I'm doing is, with the overall aim of, meeting better founders and meeting interesting investors and helping encourage people to invest in emerging markets, that kind of stuff.
And any thoughts about TikTok as a place for investors, founders, people to learn about investing?
Yeah. So TikTok, that's interesting. I don't know much about it as a place to learn about investing. I have a couple portfolio companies that are using it really well in terms of driving users, driving consumers to their products. I will say that someone who does use it to talk a little bit about investing is Janine Sickmeyer. She's an angel investor that has some funny TikToks. And then is it Emily Knows Best is the other amazing TikToker who does some very funny takes on what it's like to be a female engineer, what it's like to be a female VC, this kind of stuff. So those are kind of the only real reference points I have.
Given the increasing number of new apps, like new social media, just like connection platforms, what do you think are signs that these companies could be good investments and potentially become the next TikTok versus and like not the next Vine?
That's interesting. Well, I mean, I think I'm not sure I know the answer to that question, but I do know the answer to a related question, which is all about how the verticalization of consumer networks and the verticalization of consumer social is really kind of the future right now. And that's where I see the most clear signs of when a community has effectively been able to hit a certain level of engagement, hit a certain level of retention, and hit the kind of metrics that indicate they might be about to embark upon a flywheel situation. And so it's hard for me to give you a sense of the Vine versus the TikTok conundrum. I guess one could probably argue that TikTok was always more of a niche market going after 18 to 25-year-olds versus Vine, which was just sort of everywhere. So maybe there's something in that, but I'm not speaking with any authority.
Cool. And going into then the emerging markets, tell us why LATAM is an exciting opportunity for investments.
Sure. So, I mean, the venture capital dollars into Latin America has gone up about 10 times in the last 10 years. And all the evidence that we have pointing forward shows that, the biggest unicorns of the future are going to come from emerging markets. So I think we are just at the very beginning of the type of ecosystem that we are going to see being built in a place like Latin America. So it's very fun for me to be investing in LATAM, and more than just to be investing in LATAM, I feel like my role is oftentimes to shepherd in international investors to come make their first early investment in LATAM. There's kind of a trend in emerging markets where an international VC fund, maybe out of Silicon Valley, will say, okay, we're going to start investing in emerging markets, but in order to do it safely, we're going to start at, the Series B stage, right? And this is simply because they oftentimes do not have boots on the ground. They simply don't have knowledge of the ecosystem. They aren't ready to place a partner there. And so this is the safest way to do it, right? Find a few local funds and go in at a later stage. I think my role is to kind of shake that up. Magma is a seed stage fund. We also do a lot of pre-seed investing, and several of my investments this year have been really early, and several of those investments have also been investments where I have convinced, a Silicon Valley VC friend to get in for the first time into LATAM. And, it's not that scary, is what I like to say a lot. I'm in an angel group with some top VCs around the world called the Angel Collective, where we try to invest in female founders across borders. And it's kind of a similar mission. It's this idea of making investing in emerging markets palatable. I mean, last year I did my first deal in West Africa. This year some of the women in my angel group did their first deals in Latin America, and it's not as complicated as you think. It turns out investing in LATAM is just investing in another Delaware C Corp, guys.
What are some of the typical hesitations or uh, challenges that people bring up when they think about making those first investments in developing areas?
I mean, I literally think the first challenge is people actually technically think it is some complicated financial transaction. The number of VCs that have been surprised when I tell them that LATAM companies raise in dollars and are incorporated for the most part as Delaware C Corps, maybe as Delaware LLCs with Cayman on top. I can't even tell you the number of VCs that are surprised when I tell them that, right? By the same token, if you're looking at an African company, you're often looking at a UK entity. These aren't complicated financial transactions by any means. All of these emerging markets are now operating on in a, global VC market essentially. So then what you're really looking at is, do you know the market enough to make the investment? And I think, if you're trying to check out a new market for the first time, one of the best ways to do that is to become a small LP in a fund to help you get exposure to deals in the region. And then, from there, you could start investing on your own. But I mean, that's the absolute best way. I've never done a deal in Asia. I would love to. And I think my first step would be becoming a small LP in a fund out there.
Mm. I really like that progression, because I think a lot of people don't even think about, well, one, like you've mentioned a couple things, being part of a collective, a community of other angel investors, investing in a fund, and then investing in your first deal through those communities. So I think there's definitely this theme that keeps going on of educating yourself, surrounding yourself with good people, good investors who can bring you exposure to industries and geographies that you may not necessarily have on your own.
Yeah, I mean, I am such a sort of I'm very introverted, but I'm a huge networker at heart. And for me, it's so, so valuable to have that short list of people that I can pass a deal by. That is just worth, all the gold in this industry. And it's sort of a plug for my personal needs. I'm really interested in doing some D2C angel investments in the next year, but I need like a D2C VC buddy who particularly cares about female founders to pass things by, because I feel like I'm just getting started in D2C and I love it, but I don't know what I'm doing.
So, walk us through your thought process then of you're interested in direct to consumer companies, but what sorts of questions then would you ask that D2C expert buddy to get you started?
Sure. So, I mean, first and foremost, when I am in my VC role at Magma, investing in a lot of fintech, a lot of insurtech, prop tech, and a little bit of consumer social, I am really, really looking for female founders. That does not mean that I do not invest in men by any means, but I know the data and I know it well, and the data is terrible. This year, for example, in terms of global dollars into all female teams or solo female founders in 2020, we actually were just as low as we were in 2007. So in 13 years, we have not made progress. And so what we see when we look at the numbers is that female founders are really just getting more money when there's a man in the room. In the US, as an example, over the last 10 years, we've doubled the amount we give to mixed teams. But yeah, again, the all female teams, the solo female founders are just really suffering in Silicon Valley and throughout the world. So those women are the founders that I'm always trying to kind of take an extra call from, even if I'm not so sure by seeing the deck, that kind of thing, because I know that some more support is needed there. So that's sort of my first thing. But beyond that, for me, I'm really looking at an early stage founder with a vision who maybe doesn't know everything, but is willing to be coachable. And, since we're a small fund, we're not looking at huge caps. So we're not looking at people who've necessarily had lots of exits before. But we are looking for people who kind of know this business that they're doing right now.
Yeah. And I mean, I saw that even there's a recent report from BCG that says for every dollar a female founder or co-founder raises, she generates 2.5 times more revenue than a male founder. So the data is all out there. And I think it's just part of putting that into the popular narrative. Like, this isn't charity, it's not philanthropy,
Yep.
it's good business.
Yeah, this is what Jesse Draper at Halogen Ventures wrote an article this year called, Investing in Women is Not an Effing Charity. And it's really amazing to me to be in venture capital and to see that we now have study after study that shows that investing in mixed teams and in all female or solo female founders is better for you in terms of your profits, your bottom line, the ability to exit faster and at a higher valuation. It's all more advantageous to you as an investor to invest in those mixed teams or those solo female founders or all female teams. And yet, as an industry, we still have this idea that it's some kind of social impact cause. It's really shocking because venture capital is all about driving outsized returns. So I often think, Jen Neondorfer, she's the founder of January Ventures, and she has a line where, she says that investing in female founders is going to be the way to drive the outsized returns because they're investing in an underlooked asset class that is overperforming. And it's just such a great line. And it's so true. I think the other thing that I'm very aware of is, my role in the industry as a female investor. We all, no matter our gender, have a role in the industry to help us drive better returns and invest in more female founders. But as a female investor, despite all the biases that I may bring to the table, because we all bring biases to the table, I am still up to 3 times more likely to invest in a female founder. So it's really important if you're a female founder and you want to have kind of an edge or a better chance of getting funding, that you find some female investors to pitch.
So it's clear that you invest in, a lot of different industries that you weren't necessarily an operator in. And so especially for new investors who are interested in a lot of different industries, what do you do to get smart quickly on an industry that you don't necessarily have direct experience in? What kinds of questions do you ask?
I love that. That is such a good question. So to be clear, my background as an operator is in consumer social, right? So when I became a VC about a year ago in LATAM, knowing that I would be doing a lot of fintech and not having done a lot of fintech angel investing, it was amazing to me to start reading and to start realizing how similar some of the verticalization in consumer social was to the new verticalization coming into fintech, right? And so when we think of, how verticalization happens in any industry, it pretty much happens when you have new data, new founders, and new types of funders, right? So in the example of new data, I often talk about something called the gender data divide, which is this idea that a classic example is, a woman reports to an ER with what she believes are symptoms of a heart attack, but the doctor is not able to recognize that as a heart attack because most of the medical literature on heart attacks is based on studies done on men, right? So the gender data divide is, okay, we start studying a new thing and we get new information about a new market. As one example, I have a portfolio company doing remittances from the US to Mexico. It turns out when you look at that data, women are sending remittances at a much higher rate than men. So this is going to be a women's bank, right? So you've got new data, then you've got new types of funders. So you have more women, more people of color on the investing side of the table. And those people are able to recognize opportunities in great founders more easily. So this kind of allows you to create verticalization. It's sort of the perfect storm that allows new niche communities and niche markets to be addressed once kind of a lot of those big baseline things have been addressed. Like we've got a huge neobank now, but now let's make a neobank for women. Let's make a neobank for LGBTQ people. Let's make a neobank for kids, things like that. So I've been really encouraged to see some of the parallels between industries, and that has been good for me. Now, that being said, how do you learn about a new industry that you really don't know anything about? If I were to become a biotech investor tomorrow, I would spend 6 months pretending like I was at Biotech Investor University, and I would enroll myself in all the YouTube classes I could possibly find. It's research. And I think people don't realize that about the VC role, that so much of it is reading, trying to become enough of a generalist that you can get a sense of an industry you maybe don't really know a ton about to make a wise decision. And more than that, to ask people who are smarter than you always.
And so if you were to, let's say, go into biotech and look at all these videos, what kind of information are you looking at? It's, when you talk about the industry, is it the major players? Is it the challenges? Like walk us through, if you were kind of creating that like thesis, how you're shaping that.
what I'm going to look at is I'm going to look at the nodes. So these are the people who serve as sort of the nodes of the industry, right? So who are the big biotech investors? Who are the big biotech founders? And how are these people interconnected? Because that's, as soon as you start to break down the network, which you are not yet in, then you can start to find a way to get into that network. So that's the first thing. I'm going to figure out the players. Then I want to look at trends. And a good way to look at trends is to look at the last 5 to 10 years and see what has done really, really well, and then what has done really, really poorly. And really, really well, oftentimes there's, a good HBS case study about that you can read about. Really poorly, well, sometimes there's often a good HBS case study you can read about that as well. But, as your first step into a new industry, you're going after the most well-written things that already exist, that surely already exist, to help you get a sense of it. And then you're trying to connect the players to those new ideas and trends.
I love that. I think that's a really great structure to even think about it. And to your point, one of the things we've already talked about is just people have a hard time starting because they feel overwhelmed by what they don't know, and there's no real structure for diving into essentially what's basic and readily available information. And so I think that sort of structure of just player trends, what's done well, what hasn't done well, using that as an overarching strategy is a good way to
And,
start.
just know that it's obviously going to take practice. I made that nod to the fact that I personally am interested in doing some angel investing in D2C. And so for a few months now, I've been sort of telling people I'm interested. I've done a couple deals, but more than that, I've really asked other people what they're investing in that area. I was just on a phone call with someone earlier today where I told her about a deal I saw, and I knew she was wiser than me in this area. And, I just said, why did you do it? Why did you not do it? Tell me. I'm just trying to learn.
Yeah, that humility, I think, is something that I want to point out, which is like having curiosity, being able to be humble enough to say, I don't know, but I would like to know, and I want to be around people smarter about it than me in this particular sector. So tell me what you know. In terms of LATAM, then, are there any companies on your radar or that you're excited about that you've recently invested in?
Yeah, so I'm very bullish about this company, Heffa, which is basically building a women's neobank for LATAM. Very impressive founder. I think the market is perfectly ready for this type of verticalized neobank. And I see the potential here as very high to tap into something that women want, and that women want even more in a place like Latin America, where you have a much higher percentage of the unbanked population are women than men, and a much higher percentage of unbanked people than in North America, say. So I think that is one I'm just very excited about.
For people who don't know what a neobank is, could you explain that?
A neobank is just like a digital bank. So any type of bank that's not a storied institution. So a digital bank, a challenger bank, a neobank, those are all just ways to say, a bank that's on your phone, basically.
So if you break down your thought process about that even more, so I'm imagining there's a great founder behind that, but also like how are you looking at the financials, and that made you say, yes, this is a company I do want to put money into.
So in this example, I wasn't looking at much at all of anything in terms of her financials. This was her first check. It was a pre-seed check, and I was her first check in. Now, in terms of what I knew about the industry, I actually knew a lot about it because I had spent many months last year working with another female founder in LATAM who wanted to launch a women's bank in LATAM. And we had worked together, and I had learned all this about the market and how interesting it was and the opportunity. And then very, very close to the time at which I was supposed to wire in my check, her male co-founder took the company out from under her, and she and I, founder and funder alike, were both left on the street. So for me, this was an example of an investment. This investment in Heffa and Emma was an example of something that was definitely already on my radar. And I think that a lot of VCs have that. If you ask a VC, what do you want to invest in the next 2 years? A lot of times they'll say, I'm looking for a really great B2B pure lending, or whatever it might be. So for me, this was an example of that. which
Got
made
it.
it even easier to identify that it was a really strong founder in doing something that I knew I was already interested in.
Mm. So do you think it's really important then as an investor to know what you want going into the like exploration process for new deals, or is it better to have that openness as I'm a generalist and what comes my way I'll consider?
I think you need both things. I think that if you are looking for something, it might be easier to convince you to go into that deal and to do it quicker. But I mean, there are many times when I'm completely surprised by a solution. It's something I've honestly never thought of. And I say, hey, that is amazing. And I want to be a part of it. And let's learn more. And that's going to take a lot more due diligence on my part because maybe it's an industry I really don't know much about. Right. And so then I've got to dig in deep to figure out what kind of metrics are really good in this area and how those measure up against what this company is telling me their metrics are, right?
What are some of your most successful investments?
Hmm, that's a good question. Hmm. I think, I mean, I've only been VCing a year now, so I've loved to see what Heffa has done, and they've raised a couple of rounds now, and we've been really happy with their success. Emma made it into the finals of the TechCrunch Disrupt competition. She beat out like 1,995 other people to do that. So that's a fun one that's been on my radar this year.
And for your overall portfolio as an angel investor, tell us about how you think about the composition of it, and both in terms of industries, the number of companies, and your own expected return that you're targeting.
I actually don't have really set numbers on this. And it's interesting because I have a friend who gave me a good way of thinking about angel investing some time ago when I asked her her perspective on it and how she made decisions about how many checks she would do in a given year and in what industries they would be. And she said that for her, oftentimes angel investing was a way to almost replicate your MBA program. So to invest alongside people you really respect with the hope that you can really learn from them in the course of that investment. And that was something that really helped kind of clarify my thinking and also gave me a bit more freedom to invest in things that were outside certainly my, day thesis, a day-to-day sort of thesis as a VC. So I'm not really restricted as an angel. I don't have a real guiding principle. I do prefer female founders and all female teams because I think that's where I can kind of best help support the ecosystem and best make a lot of money. But in terms of,
What about some lessons that you've learned? Do you feel like any mistakes that you've made in investing, even though it's been, not that long in your career, but something that you think that new investors should look out for?
I mean, I think the big thing that I've learned from others that I'm trying to implement is I really want to keep better track of the things I say no to. And to just at least, if I'm not going to go to the extent of writing a long investment memo about why I said no, which is something that I've heard some people do and is a great best practice, that hopefully I can write half a page or, a few sentences in the case of some random angel deal that I barely looked at, because I think that will be the best thing that can kind of help guide me in the future. Um, Oftentimes we look at the good things that happen to us in life and we think it's because of good decisions, but a lot of times good things just happen even after bad decisions. So I would like to kind of keep track of when I said yes and when I said no and then what happened next as a way to hopefully learn more.
It's great advice, doing the postmortems on anything that you do. And I really like that point as well. It's just, oftentimes when we do well, we attribute it to our good luck, good decisions. And when we do badly, it's like, oh, it's
Yep.
just bad luck.
Yep.
Um,
Yep. Yep.
so actually, I wanted to dig in a little bit more to the actual investment memo. What goes into
Mhm.
it? Like, what goes into that final decision as you're saying, okay, here, check this out? Like, what are the different sections in the investment memo that ultimately say this is a green light?
So I think what's interesting, and it would be interesting to kind of compare notes with other people. For me, by the time I'm writing an investment memo, I'm writing it as if it was, a case study for business school, or as if it was a chapter in one of the books I'm writing. So I've already made the decision, and this is my explanation of why I've made the decision that I've made. I do not know if other people do it differently. So for me, the beginning of it literally is like a story about that company, about how I met them, why I was interested, who the founder is, the context of our initial meetings, how many meetings we've had, how the relationship progressed, and then get into tell the story of why the founder chose this problem and not any other problem in the world to work on, which is something Nathan, my boss at Magma, says a lot, which I think is really a great question. He often asks founders, why are you doing this with your life instead of doing anything else? And so then, talk about the problem they're trying to solve and why they're trying to solve this problem. Then you're going to get into some of the, more boring stuff like the market size and the citations. But I think for me, especially at the pre-seed stage, it's so much about the story and so much about the founder and so much about explaining where my own conviction comes from.
Mm-hmm. And we talk a lot about what goes into a yes. What about what goes into a no? Going on this this thread of you wanting to write more of that, essentially that memo or explanation of why you didn't invest. What would you say are factors that go into a no?
So it's interesting because I know people have really different insights into how you should craft a no to a portfolio company you are turning down. I heard on a podcast long ago someone say, some investor, I do not remember who, say, that he actually did not believe in crafting long responses with specific reasons simply because every no is the result of a very complex algorithm going on in your own brain. And that is the thing that has most stuck with me over the years as being true to my own scenario of, there are so many small reasons that might lead to me saying no. And small doesn't mean that they aren't relevant. Small just means that so many different intersecting priorities interact at a given time that lead to a no. And I've had this on my desk for years. I was thinking about this yesterday. I don't have any picture frames of my kids on my desk. I really should. But I've had this on my desk, I think for 4 years now, and it just says hell yes. And I mean, I really think if you're not a hell yes about an investment, you probably shouldn't do it because there's so many things that are about to go on wrong that are about to go wrong no matter how excited you are about that startup. So if you're not even like hell yes going in, I don't know, good luck.
I always talk about the F yes or the no.
Yes, that's so funny. Yeah, no, I mean, it's so relevant though. It's so true, right? And that doesn't mean that we don't do things in life sometimes in our careers that aren't hell yeses, but when it comes to investing, given that most of us as angels or as VCs, we're not doing that many deals every year, you better be pretty excited.
At what point did you start gaining confidence in your investing capabilities?
Within the last 2 years. And I think for me, gaining confidence, I really think for a lot of early angel investors, I think starting in syndicates is a fantastic thing to do. I think it's a great way to get a lot of exposure. You see a lot of deals, you invest small amounts in a number of deals. And so I think for me, confidence started to come when I started to trust my own instincts more. And I should say, trusting my own instincts was not because of some outcome I have seen. You know what I mean? I've been investing for less than 5 years now, so I really haven't seen very interesting outcomes yet, right? But trusting my own instincts meant that I felt really confident in the yeses and the nos I was giving. And for me, that showed growth in my own learning process, and it showed that okay, I was ready to not do as many syndicates and start doing more direct deals or things like that. And I think that's a great time to start doing it when you start feeling, you see a deck and you say this is my kind of company, and maybe it's not good after you talk to them on the phone once or twice, but by seeing the deck, you know that that's the kind of thing you like, and that matters. because it's your journey. I will add one thing. I think this was a very, very fun moment as an investor, and it happened to me in the last year where I had kind of that first experience of a deal came to me that people I loved, and I was just like, this is all bad. So it was a really interesting moment for me because it was the first time that I had had a very objectively good looking deal come to me through a variety of sources that I really, really love and respect. And I went in actually believing I'm sure I'm going to do this. And then it just felt all wrong. And that was a great kind of feeling and experience to have the first time that happened. And, as I say, I'm a young investor, so that hasn't happened to me a lot of times at this point. But the first time was something I'll remember for a long time.
That really resonates with me because this two things. One is that you don't need the outcome in order to build confidence in your journey.
Mm,
And this idea that so often that we have that, like, how can you if you don't already know? And you need that 100% conviction and evidence. But what goes further than that is, I mean, really the use of the word feeling.
hmm,
And when we talk about intuition and emotional intelligence, I mean, I think this goes across all aspects of business and leadership, um, in so much that we do overvalue it, at least in my opinion, we overvalue like logic and evidence and data and undervalue emotional intelligence and intuition. And especially, in this pre-seed stage, in when we're investing in people, like really dialing into that, like, how do I feel about this? And I can only imagine how empowering that was for you to say, like, all these people are in it, but like I have confidence in myself and how
yeah.
my body is responding to this deal.
100%. And I love that you said my body. I've been so interested in all things somatic lately. So that's absolutely it. Like, what is your body feeling in reaction to this?
Yeah. And what's the most important takeaway that you'd like to leave our audience of new investors with?
I think that, I think that the thing that is most valuable to hear if you are a new angel investor getting started is just to remember that you, as an individual with your weird, crazy, bizarre life journey up until now, probably have some secret sauce when it comes to investing. And that is probably the place to start. I mean, for me, I knew consumer social. I knew social media, that kind of stuff. And so those deals for me made the most sense in the beginning. And to this day, those deals are some of my most favorite. But everybody has something like that. And so if you try to find the networks to tap into to see more of those deals, I mean, your learning curve as an investor, I mean, it's just going to be off the charts because you're going in to a vertical you already are pretty good at. And I think that's a great way to get started, to get some traction and to get some confidence under your belt. And then, go into ag tech, right? I don't know.
Well, this was, I think, really, really empowering discussion for me, for the audience, just in really building that confidence in yourself as, like, I can do it as a new investor. I can make the first move into something that I'm not a total expert on, but I can learn.
Mhm,
And anyone
mhm.
who's curious, anyone who's humble can learn, and become a confident investor. And final question for you, and this is specifically for our premium members, is what is the one industry that you see the biggest upside in for the upcoming year and why?
So keep in mind, I'm a venture capitalist in an emerging market. And in a place like Latin America, a third of our deals are fintech every year, right? So I'm going to have to answer fintech on this one. But the reason I'm going to have to answer fintech also has to do with my own belief in just the verticalization of fintech is about to go bonkers in a great way. We saw this in consumer social some years ago. You don't invest in a LinkedIn, you invest in a LinkedIn for pet sitters, you invest in a LinkedIn for grandmas, you niche down, you create a smaller vertical within a larger thing. And that is what is going to happen. I mean, it has already started happening in fintech in many places of the world, but now it's going to happen in emerging markets. So, a few examples. In the past few years in the US, we've seen, a bank for kids, we've seen a bank for LGBTQ people, we've seen a bank for parents, and most of those banks are now coming to LATAM. Not those same banks, I mean, most of those ideas. So most of those startups are now coming to LATAM, and we will start to see those, and they will be based on tapping into their success. Hopeful success will be based on tapping into a market that has been underserved until now, and I think that's super exciting.
And in terms of then the finance and the banking, is it appropriate to say that what you're excited about, in addition to those overlooked audiences, and is that niche banks are where a lot of the opportunity is, where it's like banking for women and then banking for, this type of geography?
I think that what we've now established, that people are interested in challenger banks, they're interested in having a bank in their phone, right? They're no longer as passionate about the community brick and mortar banks as they used to be, for a variety of reasons, including costs in terms of customer service. And so now what we're seeing is the niching down is going to create banks that serve individuals even better, because they will be niched for your specific needs. And I think that's really, really exciting. For example, I, as a woman, love Elvest and watching Elvest success in the US. And so seeing a model like that come to LATAM or another emerging market is gonna happen soon, and for good reason, right? I mean, women responded to Elvest because it feels like a a place that understands your money. And the same thing is going to happen in these emerging markets.
And I think it's hard to talk about fintech without talking about digital currencies, blockchain, and the future of how that's going to affect the way we bank. So, do you have any opinions on that?
Well, I mean, I know there was a massive, massive deal just announced today in Latin America, a $62 million deal with Kazakh, in a big blockchain company in Mexico. So I think that a lot of people have a lot of reason to be bullish about that in the next few years. I think the thing I will say about blockchain that is very interesting is that, these new financial technologies and new currencies come, I believe, on the back of incredible kind of innovation, on the back of incredible resilience and hardship that a lot of these founders have faced. And that's why I think you see such good innovations in something like blockchain in emerging markets. Um, I like to say there's no there's no coincidence that so much of the interesting cryptocurrency innovations are coming out of Venezuela right now, right? Because this is the place where people are really, really feeling it, and people are really, really looking for great solutions. So I think it's really exciting to see what's happening with blockchain, especially, I am a US citizen, having lived in Latin America for 15 years and having struggled for 10 years, having struggled all that time to transfer money back and forth. It's a freaking nightmare. Do you know what I mean? And understandably, someone needs to fix this and make it better to do cross-border currency transfers in countries like this. And they will, because they know what they're doing.
So, if there is a new investor who's interested in fintech in emerging markets, what sorts of signs, questions do you think they should be asking themselves if they see a company that looks appealing to them?
Well, it's funny. So I live in Argentina, and Argentina has been in a horrible economic crisis for about a year now. We're in hyperinflation. Maybe it's been longer than a year. I don't even remember anymore. And my boss, Nathan at Magma Partners, made some joke recently, which was so accurate, where he said, the average Argentine grandma knows more about currency fluctuations than the most seasoned Wall Street trader, which is absolutely true. So I feel like if you are a fintech investor trying to learn emerging markets, you just need to find a buddy who lives in an emerging market who has lived through it and ask them some questions.
I love it. I think that this whole conversation has just been really grounding, I would say, around like what it takes to like be on the ground and just like ask the right questions. So thank you so much for your wisdom, your perspective today. I'm really excited to see the types of companies that you add to your portfolio, the kinds of changes that are going to be happening in Latin America and how you're driving that. So appreciate you sharing your knowledge on The Confident Investor.
Thank you so much for having me. It's been so much fun.